Why do you suddenly feel the strongest urge to trade right before you lose? Why is it that on your most impulsive entries, your confidence feels highest? Why do those moments feel so clear, so certain, and then minutes later, everything collapses? If you've ever stared at your chart and thought, this one feels different, only to watch it turn against you, then what you're about to hear will hit close. Because that urge you feel right before you click buy or sell, that rush, that pressure, that inner voice saying, now, do it now, that's not intuition. That's psychology working against you. And once you see it, you can't unsee it. Let's break it down. Number one, the illusion of urgency. There's a moment every trader knows. Price starts moving, candles get bigger, momentum builds, and suddenly your brain says, you're going to miss this. Your heart rate rises, your breathing changes, your body leans forward. You stop thinking about risk. You stop thinking about your plan. All you can think is, I need to be in this trade. That feeling is called urgency bias. Your brain interprets fast movement as an opportunity that won't come back. It creates artificial scarcity, and scarcity triggers emotional decision-making. It's the same mechanism used in sales. Limited time offer, last chance, only a few spots left. But in trading, the market is open tomorrow. There will be another setup, another entry, another move. But your brain doesn't see that. It sees motion, and it translates motion into opportunity, and opportunity into pressure, and pressure into action. That's why your worst trades often come when the market is already moving fast. You're not entering from clarity, you're entering from fear of missing out, and fear is never patient. Number two, emotional momentum after losses. Have you noticed this? You take a loss, then suddenly you feel an even stronger urge to trade again, almost like you need to get it back, or prove something, or fix what just happened. That is loss recovery bias. Your brain hates being in a negative emotional state, and after a losing trade, your mind feels incomplete, unresolved, so it pushes you toward another trade, not because it's a good setup, but because it wants emotional closure. It wants relief. It wants to restore balance. And that urgency feels powerful. It feels justified. But it's dangerous because you're no longer trading the market. You're trading your emotions. And when you trade from a need to feel better, you abandon logic. You abandon structure. You abandon patience. You don't wait for confirmation. You don't respect your system. You just want the pain to stop. And that's exactly when the next loss happens, because the market doesn't care how you feel. It doesn't owe you a recovery trade. It doesn't compensate for your last mistake. But your brain keeps pushing. Take another one. Just one good trade. This time it will work. And before you realize it, you're stuck in a loop. Loss, urgency, impulse, loss again. That urge you feel before losing, many times it's your mind trying to escape discomfort, not your strategy finding an edge. Number three, overconfidence after wins. Now let's flip it. You take a winning trade, it works beautifully, you followed your plan, you exit in profit, you feel good, confident, tapeable, and then another setup appears, and this time you don't hesitate, because now you feel in sync. You feel like you understand the market, like you can see what others don't. That feeling is called overconfidence bias. After a win, your brain increases your perceived level of skill. It exaggerates your control over outcomes, and it lowers your sense of risk. You start believing your recent success is proof of future accuracy, so your next trade is taken faster, with less confirmation, with more size, with more emotional commitment, and often that's the one that fails. Not because your strategy stopped working, but because your discipline did. You weren't objective anymore. You were riding the emotional high of being right. And when your identity becomes attached to being right, you stop questioning your entries. You stop validating your setups. You trust your feeling more than your process. And feelings are inconsistent. They shift, they react, they get influenced by what just happened. So that sudden urge to jump into the next trade after a win, That's not clarity, that's inflated confidence, and inflated confidence leads to blind spots, and blind spots lead to losses. Number 4, the dopamine loop. Every time you place a trade, your brain releases dopamine. That's the chemical linked to anticipation and reward. It's the same system triggered by social media, gambling, video games, any activity where outcomes are uncertain and rewards are possible. Trading is one of the strongest dopamine environments that exists because every trade holds potential profit, potential excitement, potential validation, and your brain becomes addicted to that feeling, not the outcome, the possibility. So what happens over time? Your brain starts craving that feeling, that moment before entry, that rush, that anticipation. And when you're not in a trade, you feel slightly uncomfortable, restless, like something is missing. So your brain looks for reasons to enter. It scans the chart, it finds patterns that may not be real, it interprets noise as signal, and suddenly you feel that urge again. Take the trade, even if your system says no, even if the setup isn't clear, even if your rules aren't met, because your brain doesn't want discipline, it wants stimulation. And that's how overtrading begins, not from greed, not lack of knowledge, but from neurological conditioning. Your brain learns that trading equals excitement, so it pushes you toward it again and again. And the more you follow that urge, the stronger it becomes, until you feel like you can't sit still, until you feel like you always need to be in a position. And ironically, that's when your edge disappears, because your edge exists in selectivity, in patience, in waiting for high-quality setups. But dopamine doesn't like waiting, it likes action, so it pushes you right into low-quality trades, right into losses. That urge you feel before losing, sometimes it's just your brain chasing a chemical. Number 5, identity and the need to be a trader. Here's something deeper, something most traders don't talk about. When you start trading, you begin to build an identity. I am a trader. You watch trading videos, you follow markets, you talk about setups, you track your results, you become emotionally invested in this role. And with that identity comes a subconscious expectation. A trader trades. So when you're sitting still, not taking trades, doing nothing, it can feel like you're not fulfilling your role, like you're not being productive, like you're missing something. So your brain nudges you. Take a trade, do something, act like a trader. Even if the market is not offering anything, even if your strategy says wait, even if the best move is no move, your identity pressures you into action because doing nothing feels like failure. But in trading, doing nothing is often the highest skill. The best traders in the world spend most of their time waiting, observing, ignoring noise. They don't feel the need to prove they're traders every minute. They don't need constant action to validate their identity. They're comfortable with stillness. They're comfortable with missing moves because they understand their job is not to trade often. Their job is to trade well. So when you feel that urge to enter a trade just to feel active, just to feel involved, just to feel like you're doing something, that's identity pressure, and it quietly leads you into bad decisions. Because the market doesn't reward activity, it rewards precision, and precision requires patience. Now, pause for a second and think about your last losing trade. Was there an urge before it? A push? A feeling that you had to act? Was it after a loss, after a win, during fast movement, during boredom? If you look closely, you'll start to see a pattern, and that pattern is not random. It's psychological, it's predictable, and once you see it, you can start interrupting it. So how do you stop this cycle? How do you prevent that urge from controlling your actions? Let's go deeper. First, you need awareness, not surface awareness, deep awareness. You need to catch the feeling in real time, the moment your body leans forward, the moment your breathing changes, the moment your thoughts speed up. You pause and you ask yourself, is this my system or my emotion? That one question creates space, and in that space, you regain control. Because most impulsive trades happen in milliseconds. There's no pause, no reflection, just reaction. But when you train yourself to pause, you weaken the emotional impulse and strengthen your rational mind. Second, you need rules that are visible, not in your head, in front of you, written, clear, non-negotiable. Entry criteria, risk limits, session times, max trades per day. Because when the urge appears, your mind becomes creative. It finds ways to justify breaking your plan. But written rules anchor you. They bring you back to structure. They remind you of your edge. And every time you follow your rules, even when you feel the urge not to, you reinforce discipline, and discipline is what protects your capital. Third, you need to accept discomfort. This is where most traders struggle, because waiting is uncomfortable. Watching a move without you is uncomfortable. Missing a trade is uncomfortable. Sitting on your hands is uncomfortable. But that discomfort is part of the job, and the traders who win long-term are the ones who can sit inside that discomfort without reacting to it. They don't try to eliminate it. They don't try to escape it. They allow it. They observe it, and they let it pass. Because they understand, discomfort does not mean danger. It just means you're not getting what you want in that moment, and that's okay. The market doesn't owe you constant opportunities. Your job is to wait for the right ones. Fourth, you need to detach from outcomes. This is huge, because the urge to trade is often tied to the desire to win, to be right, to make money, to feel successful. But when you focus on outcome, you create pressure, and pressure leads to impulsive decisions. Instead, shift your focus to execution. Ask yourself, did I follow my plan? Did I respect my rules? Did I manage risk correctly? If the answer is yes, then you did your job, regardless of profit or loss. And when you measure success by execution, the emotional urgency begins to fade because you're no longer chasing a result, you're following a process. Fifth, you need to reduce screen addiction. Let's be honest. Many traders sit in front of charts for hours, watching every tick, every candle, every small movement. And the more you watch, the more you feel the urge to act, because constant exposure increases emotional involvement. So create structure. Define your trading windows, your analysis time, your execution time, and your off-screen time. Step away. Give your brain space, because clarity increases when you're not overstimulated, and impulsivity decreases when you're not glued to the screen. Now here's the truth most people don't want to hear. That urge you feel before losing will never fully disappear, because you're human. You have emotions. You have biases. You have a brain wired for survival, not for trading. But you can learn to manage it. You can learn to recognize it. You can learn to respond differently. And that's what separates losing traders from consistent ones. Not intelligence, not strategy, not indicators, but emotional regulation, self-awareness, discipline, the ability to feel the urge and still choose not to act on it. That's power. That's control. That's trading mastery. So next time you feel it, that sudden pull to enter a trade, pause, take a breath, step back, ask yourself, is this a high-quality setup or a psychological trigger? And be honest, because your account balance depends on that answer. You don't lose because the market is against you. You lose because your mind is not yet trained. But the moment you start observing your patterns, interrupting your impulses, and respecting your process, everything changes. Your trades become fewer, but better. Your losses become smaller and less emotional. Your wins become more consistent and less stressful. And most importantly, you stop fighting yourself. You start working with yourself. This is the real edge in trading, not a secret indicator, not a perfect strategy, but psychological awareness. Because once you master your mind, the market becomes much easier to navigate. If this message resonated with you, if you felt that urge, if you've experienced those impulsive losses, then you're not alone. Every trader goes through this. The difference is, some traders ignore it and repeat the cycle, while others study it, understand it, and grow beyond it. Be the second type. And if you want more insights like this, more deep dives into trading psychology, more ways to build discipline and consistency, then stay connected. Keep learning, keep observing yourself, and keep improving one trade at a time. Because the moment you control the urge is the moment you start controlling your results. Disclaimer: the information in this video is for educational and informational purposes only. It is not financial or investment advice. Trading involves risk, and you should only trade with the money you can afford to lose. Always do your own research and consult a qualified professional before making financial decisions.